Let's talk about Christopher Woods and his latest strategy report or latest newsletter, Greed and Fear, one of the most widely circulated strategy note that he has written for the week. Now, when we talk about really what's happening as far as the previous week is concerned, US Fed, what happened over there, the press conference, the reaction to yield, that is something which was global headlines, and they believe that that is something which all the investors were looking forward to, and that's why majority of the focus as far as Greed and Fear newsletter is concerned is what's happening with the US Fed. Now, when he talks about US Fed, he said that US Fed officials were not much concerned about the 65-70 basis points increase as far as US 10-year yield is concerned. This is a message which is conveying to them that this is a signal of strengthening of the economy and not that, it's not demand-led. This is not rising inflation concern. It is a demand-led sort of a up move as far as US 10-year yield is concerned, which means, according to Greed and Fear, they maintain their, call that this is a reason to stick with the current recommendation or the style of investment of domestic cyclicals. Trend will continue to be long cyclical bonds and short treasury bonds. This is something which they have done over the last 2 or 3 months, and that is something which they continue to believe. As of now, there is no sign from the policymaker that there could be a dynamic move in the yield curve, and that, according to them, is something which investors should not much worry about. Yes, markets have been concerned, markets have been reacting to what's happening in the yield curve, and especially the US 10-year yields and how essentially things are moving on that front, but they believe that majority of it is on concerns of inflation. US Fed in the press conference was quite clear, not much concerned about what's happening as far as yield is concerned, or at this point of time they do not really see a need to panic so that the yields need to be controlled, and that, according to them, is one of the key reasons which make them believe that there is a strengthening as far as economy is concerned, and it's not that inflation is not coming back by demand, or it's a demand-led increase as far as the US 10-year yield is concerned. Now, about 2 to 3 months back, or maybe even before that, they have changed their style of investment. So they were earlier focused on the growth style of investment, and then they advised their clients that cyclicals across countries which they like is something which will tend to do well, and that is what they now stick to after this particular Fed meet. Despite the yields going up, they believe that domestic cyclicals across various countries that they like will tend to do well. One of the key overweight calls, or one of the key calls that Christopher Wood had, was also regarding the European central banks and how he believes that that is something in a percentage basis could do much better. Again, it was a domestic cyclical trade that they advised their client, and after the Fed meet, the much headlines awaited as far as the Fed chairman's press conference is concerned, they continue to believe that the style of investment which will work or which will outpace others is buy domestic cyclicals, sell treasury bonds or short bonds is essentially the call that they have. As far as India is concerned, they continue to maintain their overweight stance on India. Among the emerging markets, it is one of their preferred picks.